In this video, I'll go through my complete portfolio and show how it's performed throughout 2024, and since I started way back in 2009. If you stay to the end, I'll reveal what I've been buying recently and also my investing plans for 2025. I'll go through each sector in ascending order performance for the past year. I try to shield as much of my investments as I can from tax using a stocks and shares ISA, which we are very fortunate to have in the UK. This is not investment advice and I'm simply showing you my own journey. In the mining sector, I have just one company, Rio Tinto, and at the time of this video it fell almost 20% throughout 2024. Much of Rio's success depends on the fortunes of China, and with the economy on shaky ground at the moment, Rio has taken a hit. Mining can be rather cyclical and patience is often needed. As I go through the slides, this figure shows the average price change for the year so far in the companies I have in a given sector. It's based on the companies I hold and not the industry as a whole. This figure shows the value of my current holding. This figure is the yearly price change throughout 2024. And because Rio is the only company I hold in the mining sector, it will be the same as the figure at the top. And finally, here is the dividend yield. I have around £8,000 invested in Rio, so I would currently expect to receive dividends of around £600 a year. In the renewable energy sector, I have just one company, Greencoat Wind Energy. It too has had a pretty poor time over the last 12 months, down 15%. Geopolitical issues and weakening climate goals have dented profits. Adverse weather and costly repairs have also impacted the share price. Despite this, the dividend yield is decent and I'm happy to hold this one for the long term. In the industrial sector, I have two companies. Firstly, Bunzl, which is a recent addition to the portfolio and supplies a range of products from food packaging to hygiene materials. And secondly, the chemical specialist Croda, which has had a dreadful year, down 31.7%. Weak sales have taken a toll, but there are signs that revenue could be starting to pick up. In the house building sector, I have only one company, Pimon, and it's down 13.1% on the year. The good news for the company is that demand looks strong and orders are up, but can Pimon make money out of it? The firm expects higher costs because of a mix of inflation, new building regulations and a budget. The dividend yield, however, is above average at 5%. In the oil and gas sector, I have two companies. Both BP and Shell finished the year in the red, down an average of 10%. Global oil prices have been falling. The incoming administration in the US looks set to incentivize energy production, creating extra competition for BP and Shell. Windfall taxes have not helped either. BP's venture into renewable energy has not gone well. Shell, on the other hand, has remained focused on hydrocarbons and has done a little better. In the pharmaceutical sector, I have two companies, AstraZeneca and GSK, and they are both in the red, down an average of 6%. But I'm happy to hold for the long term. Whatever the state of the economy, we all need to buy medicines. In the utility sector, I have three companies, which on average is down almost 5%. Earlier in the year, National Grid had to tap its shareholders for extra funds needed for infrastructure upgrades. I'm hopeful the utilities will do well in the long term and continue to churn out reliable dividends. The third company I hold in this sector is United Utilities, which is more or less unchanged on the year. An ETF now, and finally we see a share in positive territory. This one tracks the FTSE 100 and is up 5.6% on the year. I sometimes buy this one inside the ISA when I can't see compelling bargains elsewhere. As with all my ETFs, it pays dividends 4 times a year. The annual dividend yield is currently 3.7%. In the insurance sector, I have one company, Aviva. It's had a moderately good 12 months, up 7.9%, and the dividend looks very impressive at over 7%. Aviva is now a more streamlined and focused business, and I've been adding more to my holding recently. In the consumer goods sector, I have 3 companies. Despite Guinness sales going through the roof lately, Diageo is still down 10% across the last 12 months. Unilever has been doing much better in 2024. The new CEO has been restructuring the business and disposing non-core brands. Haleon, which used to be part of GSK, has also done well and it's up 16%, a company perhaps to watch for the future. Now on to my global ETFs, which are up an average of 14.4%. VWRL gives me exposure to thousands of companies across the globe. It really is like buying the world with just one share. VHYL does a similar thing but focuses on companies paying higher dividends. The capital growth, however, is not as good as VWRL. My third global ETF is VVE, which focuses on the developed world only. There is quite a lot of overlap with these world ETFs, and I'll be doing some consolidation at some point. Next is the information technology sector, and I have two companies. The shares are up an average of 14.4% over the last year. Both of these companies have moved into the AI space. Because of their low dividends, I tend to keep them outside the ISA. There just isn't enough room to keep everything inside. In the food and tobacco sector, I have three companies, and it's been a fantastic 12 months for these two. Dividends are huge, especially with British American tobacco paying over 8%. Tate & Lyle has not done so well, however, down 2.2%. We are finally into the top 5 performers now, and in the retail sector, I have just one company, Tesco. It's up 25.7%, which is almost the same as the S&P 500. The company is focusing on price, quality and innovation, and has really been taking the fight to upmarket rivals such as Waitrose and also budget operators like Aldi and Lidl. It's been a great year for Tesco. At number 4, it's my S&P 500 ETF, and it's up 26% this year. With its small dividend, I like to keep this one outside the ISA and my higher dividend payers inside. This is one of my favourite ETFs, and I continue to buy more of this one on a regular basis. At number 3 is the brokerage services sector, and I have two companies. Both IG Group and the London Stock Exchange Group have shown decent gains over the last year, up 27.2% on average. IG Group is a FTSE 250 company. It not only pays a high dividend, but is up over 30% this year. The London Stock Exchange Group is a very well-run business, and although it pays a small dividend, it has a great track record of growing the dividend year after year. My second best performing sector is banking, and I have three companies. Barclays is up an incredible 72%. HSBC is also in the green, and it pays a big dividend of 6.1%. I also own shares in Lloyds, and the shares are up 14% on top of a nice dividend of 5.3%. So on average, the banks are up 37% overall, and there are those big dividends as a bonus. But the highest performing sector of all, for longer than I can remember now, is defence and aerospace. The shares of BAE Systems is up 2.7%. The shares had a great start to 2024, but slipped towards the end of the year. Rolls-Royce really has been doing all the legwork here, up an incredible 90%. Their profits have been absolutely rocketing since the end of the pandemic. Rolls-Royce doesn't currently pay a dividend, but that may change in the near future. Now for all my recent purchases over the last 3 months. With my portfolio currently paying dividends of over £1,400 a month, I don't always have to put new money in to buy more shares. The vast majority of money this quarter has gone into my S&P 500 ETF, with an additional £10,000 added to it. I've put £1,000 into my FTSE 100 ETF, which I sometimes add to with accumulated dividends within the ISA. With individual shares, I've added £1,000 each to Bunzl and the London Stock Exchange Group. I've added £900 to BP and Aviva and £700 to Diageo. As I tend to be a buy and hold investor, there have been no sales this quarter. Every month I reveal what I've been buying and selling, and you can be notified the moment I release my next video by subscribing to the channel. And now for my plans for the months ahead in 2025. Firstly, I intend to continue investing heavily into the S&P 500. I'll continue adding a little more to my FTSE 100 ETF. And as far as individual companies go, I'll be monitoring Rio Tinto, Pimon, BP and Aviva. If I see any significant falls, I might just jump in and snap up some bargains. Cash in the portfolio stands at just over £1,000. Now for the portfolio performance for the whole of last year. At the end of 2023, the portfolio stood at £415,000. And at the end of 2024, the portfolio reached £512,000. A total of £30,000 of new money went into the platform, giving me a net gain of £66,632. That's a 16% return over the last 12 months. If you want to get the ball rolling this year and start your own portfolio, then Trading 212 will give you a free fractional share worth up to £100. You can open an account using the link in the video description. I'll now compare this year's performance of the portfolio with other indices. And to do this fairly, I'll strip out any dividends I've been paid so far in 2024. With dividend payments taken out of the equation, the share price growth alone is 12% for the year. You can see in this table the portfolio has outperformed the FTSE 100, 250 and all-share index by quite a margin, but it hasn't beaten a typical S&P 500 ETF or even an all-world ETF. As you saw earlier, I've been adding a lot more into US companies via my ETFs, such as IUSA, and I'll continue to do so going forward. Now for my overall performance since I started in 2009. I made plenty of mistakes in the early days as I was learning the hard way, and all my figures include everything. The total amount I've put in from my wages since I started is $277k, but I didn't put this in as one big lump sum. I only started with £5,000 at the beginning, and then I proceeded to drip feed in spare money each month. As you have seen, the value of the portfolio stands at around $512k, giving me a current net gain of $235k or 85%. Many investors will have done much better than this, of course, and I'm only showing you my own journey. Now, some of you often ask, what if I had just invested into the S&P 500 or an all-world index right from the start? Well, to find out what my portfolio would now be worth if I had invested into other assets instead, then prepare to be shocked by this video here.